presto, gold has been following this like it knows. Yeah, because gold follows is real-time financial conditions right now. Financial conditions, the dollar, interest rates, and commodity prices. And gold is reflecting financial conditions, which is the forward look on liquidity. I'll come on to that in a sec. A bit confusing for you all, but gold is kind of explicable right now. Here's GMI global total liquidity versus gold. Gold says it should accelerate. Global total liquidity has been it got to new highs. It's flatlined a little bit because of what the US is doing. Meanwhile, China's increasing the use of its balance sheet, and the dollar's gone up a little bit. I think it probably rolls over at some point soon. We'll come on to that in a sec. And that then may lead to the final leg higher in gold and the final leg higher in markets. But you can see gold is basically pricing global liquidity impulse all the way to the end of 2026, which would be kind of what we're expecting for the cycle. Again, don't expect perfection. Raoul said, everything moves.
Today, we possess true vision. CEO Raoul Pal providing his revised forecast for the cryptocurrency market, explaining how the forthcoming cycle will differ and why the recent decline in crypto prices presents a significant investment opportunity. With cryptocurrencies and technology representing the most prominent investments this year, Raoul Pal states that he remains optimistic about digital assets after substantially increasing his position during the recent bear market. The former Goldman Sachs executive provides portfolio update regarding the cryptocurrency assets with the greatest potential for growth in the upcoming months and explains why. More than ever this year, substantial capital will be flowing into the sector, with leading pension funds and institutional investors supporting the upcoming cycle. Raoul Pal forecasts that cryptocurrency is poised to become a $10 trillion digital asset class. Pal states that this cycle will distinguish itself as devalued fiat currencies drive increased adoption within the cryptocurrency market and attract a greater influx of capital than ever before. Please leave your comments below and consider subscribing if you appreciate the content we provide here.
Realistically speaking, that's a load of fucking wank. That probably gets me banned from YouTube, but wank's a great expression in England. Okay, so the game is paying the interest payments of the debt. That is where the debt growth is coming from, is the interest payments. Don't forget, the interest payments are now a larger part of the US budget deficit than the military is. And we do that by printing money. Dun, 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 dun. I mean, Christ, I've told you this a million times. So we print money and look, we've got lots of debt to roll and we need to print money to do it. Okay. And hey presto, gold has been following this like it knows. Yeah, because gold is real-time financial conditions right now. Financial conditions, the dollar, interest rates, and commodity prices. And gold is reflecting financial conditions, which is the forward look on liquidity. I'll come on to that in a sec. A bit confusing for you all, but gold is kind of explicable right now. Here's GMI global total liquidity versus gold. Gold says it should accelerate. Global total liquidity has been it got to new highs. It's flatlined a little bit because of what the US is doing. Meanwhile, China's increasing the use of its balance sheet, and the dollar's gone up a little bit. I think it probably rolls over at some point soon. We'll come on to that in a sec. And that then may lead to the final leg higher in gold and the final leg higher in markets. But you can see gold is basically pricing global liquidity impulse all the way to the end of 2026, which would be kind of what we're expecting for the cycle. Again, don't expect perfection. Raoul said, everything moves, deviates. You need to assess the probabilities, see the data as it comes in and understand. But when I put gold versus I don't know why Julian's put everything in pink. I don't know. He's feeling flamboyant. But what we've got is that's interest payments. Gold is forward pricing it. And following up is liquidity, which lags gold by 12 months. So we've actually got the phasing of all of this, these dominoes. We talk about these dominoes all the time. And why it matters to us is because it explains 90% of crypto's moves over time. Now, again, this is the issue with the impatience and the people who don't understand this stuff is like, well, liquidity's moved. Why hasn't Bitcoin moved? It's all broken. Everything's shit. It's like, no, it doesn't work like that. There is a variability around this stuff. This is a weekly plot chart going back 11 years. Not 11 years. It actually goes back, 12 years now. And you get variability around the mean. That's how markets work. That's the 10% difference in correlation. So you expect differences, and the differences give you informational value. But what you get is this stunningly high correlation over time. And again, people don't really understand this. They're like, oh, your charts, they're just correlation versus causation. They're bullshit. You're just inventing stuff. I'm like, no, and no. Okay. US government shutdown. This is where we got it wrong because it wasn't something we could know. And there's one bit we missed that we didn't really fully grok at the time. And that was the fact that once the reverse repo had been drained, which was a net stimulus, net liquidity boost, the rebuild of the Treasury General account, they build this bank account up and down. So it doesn't really matter. But when you've got no offset to it, and the Fed is doing QT, that was a 700 billion tightening in financial conditions since July. It was dramatic, and there's no offset. See, in 2023, when it happened, they were draining the reverse repo, and it offset it. But this one didn't have that. And so we didn't really see that. And that was what caused that global M2 chart that, like, people just don't understand, because I said it's not going to work all the time. But why didn't it start? Why did it break apart? Well, it broke apart very simply because liquidity got sucked out of the system, and it got sucked out of the most beta to liquidity asset in the world is crypto. So it came out of crypto. And if you think of the crypto beta curve, you've got Bitcoin, and then Solana, let's say, and then let's say SUI. They're all different levels of beta or leverage to this trade. And what happened is liquidity starts coming out over this period. Now, the TGA should have been started draining two months ago. And once they drain it, it starts lifting asset prices significantly, the normal cycle. What happened this time is they shut down the government. So they couldn't drain it. So it got stuck at $1 trillion. And normally you drain it, but they didn't. So normally we would have seen something like 2022 where we start to see a drain. We didn't get that because it got stuck, because they stopped spending money. So therefore, no liquidity in the system. Therefore, stuff like M2 doesn't flow through the system, and things fall apart. Now, NASDAQ didn't, because 80% of all asset managers had underperformed the benchmarks this year because none of them had technology, and they still don't.
Raoul states that it represents the most rapid rate of adoption of any investable asset in all of human history. By the conclusion of 2025, the number of active cryptocurrency purses is projected to reach 1.1 billion. The rate of growth is difficult to grasp, and it will constitute the most rapid accumulation of wealth we have ever observed. This marks the culmination of a comprehensive body of research conducted over the course of a career, and every chart and bit of research consistently arrives at the same conclusion. Liquidity underpins all markets, and cryptocurrencies are poised to be the highest performing asset class of them all. Raoul has been emphasizing to investors for months that all the factors are now starting to align favorably. A phase marked by parabolic upward movements in cryptocurrency prices.
There's still a record number who think AI is a bubble, and therefore they're underexposed. So the more tech goes up, the more they have to buy into year end. And that dynamic's always very interesting. It's called performance or benchmark chasing. Added to the fact there's a load of buybacks in that sector as well. Very hard to fade. Very hard to fade unless liquidity is fully, totally turned and rates are going up and all that kind of stuff, which is not happening. The other thing is, if we think about the crypto market outside of Bitcoin, you'll notice that none of these things have gone to new highs, really. I mean, Ethereum, Solana, none of this has. Why? because it's driven by liquidity. US total liquidity has not gone to new highs yet, but it will over time because, again, to keep explaining this to you guys, because you don't want to hear me, and you lose impatience, then you go, why didn't it go up? We've got to do this game. We've got to pay for the interest on the debt. The only way of doing it is global liquidity, or is total liquidity. And as you go through, that then lifts that. So if you go back to that chart, there's the hockey stick over time, that longer term version of the banana zone that has to come into play, because if not, the whole system falls apart. So there you go. Now, the last time it shut down was back in 2019. Again, we kind of broke the plumbing of the financial system back then. So good. We broke the plumbing back then. Once it reopened, so it shut down, the markets didn't like it for the same reasons. The plumbing started creaking. The Fed had to come in, start going back from QT to QE, and also injected liquidity. So here we are. The shutdown's ended. It takes a while before the money starts flowing. So the TGA's only just kind of released $40 billion, but we're expecting like $200 billion or $250 billion over the next 2 months. So what happens then is eerily similar, should stabilize coming few days, next week, today, who the hell knows, doesn't really matter. I know it feels like it does, but it doesn't. And then the market took off like a rocket ship. And all of this is to say that the reason we look at all of this stuff is Bitcoin is, and crypto is, a macro asset class. That's the important thing to understand. What it means by macro, it's driven by macroeconomics. And macroeconomics, for me, is the business cycle. And here is the business cycle, up and down. We talked about that before. And lo and behold, remember that, the 4-year cycle? Well, that was the crypto cycle. No shit, Sherlock, because it was the debt refinancing cycle. And right now, the ISM is kind of in that middle year where it's not hooked up, not grown. Bitcoin's slope has been frustrating for people. I want this bit. Well, it's going to come in the next 12 months, and everyone's going to go, he said that last year. He's a moron. He's just a snake oil salesman. Look, market analysis is not some sort of crystal ball where you see the absolute truth in everything. The everything code is the truth. How it plays out is still something we need to learn. And we need to understand the nuances. When the world gives you lemons like a government shutdown, you need to deal with it. You bought the ticket, you take the ride. And you just kind of grow up and deal with changing probabilities, because that's how the world works. When we look at financial conditions, this is our financial conditions index, which is correlated to gold, as I said, even though it's not, gold's not in the index. Total liquidity lags it, so by 3 months. So it's suggesting that liquidity should start rising, which makes sense because we know what we've got to do. We've got to pay the debt, and we know that the TGA is going to be drained, and the QT is going to finish, and the Chinese are increasing their balance sheet, and we got regulatory changes coming, and we got rate cuts coming, blah, 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 blah. And the ISM, the business cycle, follows that. So the next thing for the business cycle is to go higher. Business cycle going higher means we'll have money in our pockets. It goes into risk assets, and that increases the price of crypto. It's not that complicated, but nobody wants to believe it because you're looking at 5-minute charts and scratching your nuts, wondering what's going on. It doesn't. You can't do stuff like that. It doesn't work. And demanding that you get paid. You can make all the demands you want. The market doesn't give a shit. And once you learn that, it's much easier to deal with. So at the ISM, we're seeing that it's some of the surveys are starting to increase sharply as the tariff stuff happens and people start getting more comfortable. What we've seen is that Empire survey started going up. It can diverge, obviously, but I think we will see the ISM starting to come up. Bitcoin is already priced in the ISM really quite low at about 47. So Bitcoin's diverging from these surveys as well right now, because I think there's a liquidation going on in Bitcoin, because liquidity is starting to come back in. Crypto's trading like shit, like somebody got hosed in October the 10th and is unwinding something. That's what it feels like to me. And it feels like, and we'll come on to sentiment in a sec, panic lows. Okay, the dollar, big component of all of this. The dollar is what is the main part of financial conditions, which leads. The dollar is following the last Trump cycle almost perfectly. Now, will the dollar's still going higher, I think, in the short term, but it should roll over and have another leg lower. Doesn't change the world if it doesn't. It just means that we have a pretty good read on when the end of the cycle is, because this leads by like 9 months. So as part of our financial conditions index, but our general thesis is liquidity comes back. They start changing a few things with like ESLR, stuff like that. And again, those of you on Real Vision, I can answer all the questions about this stuff tomorrow on the AMA. But generally speaking, as the liquidity comes back in, we should see the dollar have its final leg lower. Let me go on to the next bit. Technicals. So there's a few parallels. Again, remember, they're not going to be perfect. Don't expect to pay out perfectly. Think of it as contextualization and understanding, where you put it against 20 other things to try and ascertain what you think is going to happen. So Bitcoin in 2024, basically repeating. 25, repeating. Same correction. And you guys were losing your fucking shit back then as well. And guess what? It V-shaped out of it. But you don't remember that, do you? Because that would be too easy. Or whatever this correction was, July 24 to 25, same thing. Corrections are very similar. And we've got many of these charts of sort of similar style corrections. So I think we should continue that way.
Pal emphasizes that this pattern is standard and essential for eliminating weak palms and restoring leverage. He emphasizes Bitcoin's strong correlation with global liquidity, which continues to provide support even amidst transient liquidity shortages. He believes the market is positioning itself for another substantial upward movement. Similarly, Bitwise CIO Matt Hogan endorses this perspective, citing a pattern characterized by a decline followed by a rapid surge wherein pronounced are historically succeeded by substantial rallies, reaching gains of up to 190%. Both contend that forbearance, rather than panic, is essential. The banana zone is vibrant, yet often misconstrued. As the impetus within the cryptocurrency market continues to grow and institutional participants are positioning themselves, Raoul Pal states that a significant transformation is imminent. He states that the upcoming phase of the crypto cycle is pivotal, and he is currently deploying significant investments within his portfolio. With the upcoming bull market, and given that cryptocurrencies and technology represent the most substantial investments this year, Raoul Pal states that he remains optimistic about digital assets after substantially increasing his holdings during the recent bear market. The former Goldman Sachs executive provides a portfolio update regarding which cryptocurrency assets are poised for the greatest growth in the upcoming months. He states that substantial capital is imminent to flow into the cryptocurrency sector, with significant pension funds and institutional investors participating in the upcoming cycle. Raoul Pal forecasts that cryptocurrencies are poised to become a $10 trillion digital asset class. Pal states that this cycle will distinguish itself from previous ones, as the devaluation of fiat currencies will drive increased adoption within the cryptocurrency market and attract greater capital than ever before. Bitcoin is on track to reach an unprecedented price milestone, and Raoul anticipates a financial upheaval that will propel cryptocurrency to unprecedented levels. Raoul Pal states that the cryptocurrency industry is approaching a significant milestone, representing a profound transformation for Bitcoin and digital assets, which he refers to as the banana zone. As momentum continues to escalate and institutions are discreetly preparing themselves, Raoul states that a significant transformation is imminent. He recently expressed his perspective on the prevailing economic uncertainty, noting that tariffs and recession concerns are generating market volatility, and suggesting that a significant market rally is imminent, with Bitcoin positioned to play a role in this development. Bitcoin has increasingly exhibited characteristics of a risk asset recently, implying that if the market recovers, Bitcoin is anticipated to rise in tandem. However, the prevailing uncertainty remains a crucial factor if the market continues to remain stagnant. Bitcoin may encounter short-term downward pressure. Therefore, a significant recovery may be observed in the upcoming week. Ultimately, Bitcoin's forthcoming significant movement hinges on the outcome of this development.